All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Thursday, February 23rd. And yesterday, the S&P 500 ended a fourth day of losses. But then last night, Nvidia had earnings. They reported earnings beat expectations, and its stock soared. So today we have preliminary GDP and unemployment claims. They were released this morning. So how did the markets react to this? And more importantly, how are we trading these markets? By the way, if this is your first time here, I'm Markus Heitkoetter. This is my head coach, Mark Hodge, and we are real traders who trade live accounts. So we got a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here and looking for some honest insights into the fascinating world of trading, you're definitely in the right place. And wow, I mean, Mark, these markets never a dull moment, right?
Not at all. Not at all. Like you said, Marcus, S&P down 4 days straight. So yesterday, even though the loss was minimal, still a loss after the worst day of the year. And some interesting moves. And today starting higher, pulling back a little bit though, trying to see if 4,000 will hold as support.
Yeah, but let's take a look at a 5 minute chart of yesterday because we had the Fed meeting minutes that were released, and they were released right here at 2 p.m. Eastern Time, 1 p.m. And so what do you think about the Fed meeting minutes? Any insights? Because as we can see, the markets have been really quiet going into the release, drifting higher, and then after the release, we had a little bit of a slide.
Yeah, you see that slide, but all things considered, this was a muted reaction, in my opinion. I mean, it's not that significant, and there really wasn't anything new in the minutes to stir the markets. We heard that the Fed sees inflation remaining well above their 2% target. Okay, go
Duh.
figure. We already know that exactly. The labor market remained very tight contributing to and continuing upward pressures on wages and prices. We already knew that. So not a whole lot, or really nothing new there.
Yeah, and I think the most notable one where some traders got a little bit nervous right now is that it said most of the members were in favor of a 1/4% hike. A few wanted to see a 0.5% hike. And this is where at first, oh my gosh, are they changing course? Are they getting more aggressive? But then we already know who they are because they came out
Yeah.
last week and said, we're the ones who believe that we should hike rates more aggressively. So this were the overall move here was 1%, which is really not a whole lot. And as I said, the S&P 500 finished lower yesterday, but not dramatically, which is a word.
That I agree. Not the dramatic moment that we were expecting or that we could have seen.
Right. So let's take a look at the markets today. I actually want to go to a 5 minute chart of the mini Nasdaq. So mini Nasdaq, I mean, overnight already trading higher yesterday after the close. Huge push from Nvidia. We'll talk about that in a moment. And so they were already trading higher. And then this morning we had a few economic reports that were released at 8:30 Eastern Time, 7:30 Central Time. And let's talk about these because they're interesting. Some interesting readings here this morning.
Sure. So you have preliminary GDP coming in lower than expected at 2.7% versus the 2.9% forecast. Also, unemployment claims at 192,000. So these are Americans filing for unemployment for the first time. And the expectation was 200,000. Also, lower than the last week, which had 195,000 applicants. So, going back to what the Fed wants, well, unemployment claims rising would actually be a good thing, and that's not happening right now.
Yeah, so a lower GDP, and then I think this was the important one because this is where I looked into why is it lower, and 2/3 of the GDP is consumer spending, and consumer spending is slowing down, and that's what the Fed wants. Yes, they want to have a weaker jobs market here, but also that consumer spending is slowing down. And that's what we also saw yesterday already, if we go back to a daily chart from Walmart and Home Depot, who reported earnings and say that's what we are seeing. We are seeing a slowdown in consumer spending. So this is where it goes back to inflation, right? I mean, when is inflation going high? When everybody wants to have the goods, when demand is high and supply is scarce. And that's what we had during the pandemic. We had the supply chain constraints, and then we had all the money flowing into the market. So everybody was just on a buying spree. So it's actually good news that the GDP is coming in lower than expected. So that definitely helps the Fed with a narrative like what we are doing is working. Because some say it ain't. But this is where they say, well, it might be. And so the other big thing tomorrow will be the core PCE price index.
Yeah, and that's something that the Fed does keep a close eye on. So, positive news. There was a little reaction pre-market to that 8:30 report today, but Nvidia
Yeah,
moving the
and
Nasdaq.
Nvidia. We got to talk about Nvidia. I mean, I don't have Nvidia anymore. I got out of this was one of my most profitable trades, and I mean, this morning, if you look at this, I mean, right now Nvidia up 13%. I mean, that's kind of crazy. Huge, huge, huge here. There, these earnings calls.
Yeah, and they had a nice earnings beat. They were up 13% pre-market and still up strong. They said that they forecast a recovery in their video gaming business, but that they will push further into the AI-based software, which is going to really help them. Their earnings fell 33% from the same period last year. So we beat expectations that were significantly reduced, but it's this AI hype that's really helping out. And Goldman Sachs, they upgraded Nvidia, citing growing AI demand.
Yeah, and I mean, other chip makers are feeling the love. I mean, AMD also trading higher right now, 3.5%, was trading higher almost 5% earlier this
Yeah.
morning. You still have an AMD position, so that helps a little bit pushing this higher. So not bad, not bad. Well, and then we also had our CTRA reported earnings. So, and they are right now up 6% after being up as much at 8%. So that was looking good.
Yeah, loving this move. Yesterday we closed at 23.26. Going into earnings, we had a better than expected earnings per share reported, also better revenue than expected. So I'll take a 6% gain and getting back closer to 25 and hopefully 26 soon.
Yeah. And we were looking if we are able to sell calls against our existing position at 26. And if you look at it right now, so for tomorrow's expiration, there's nothing available for the 26 strike. And if you look at next week, it hasn't made enough of a move. So the 25.50 strike would be available and probably gives us, well, at what, 20 cents, we would probably get our 30 cents, but it's below our cost basis, but also above our break even. So it's, I mean, my break even here is 24.50. So right now we are trading above the break even. We could sell calls above the break even. Are you considering this? Maybe selling calls at 25.50?
You know, right now I'm still okay with my cost base. This is moving in such a great range. This sideways movement that we're seeing is really ideal for the wheel. The only challenge is that we've established a new range, right? Before we got assigned, there was a great range between 26 and maybe 32. And so that's why we sold the 26 puts. Once we got assigned to 26, we started trading in this 23 to 26 range. We're at that upper range. I've been able to sell calls. My break even on this one is lower than you, Marcus, because I was able to sell calls a few times. I'm just curious. Yeah, my break even's 23.65.
Ooh,
So
nice.
So yeah, I'm happy with where I'm at. The 25.50, I'll be honest, that gets a little tempting because, and not typically my plan, but maybe selling calls there, and there's going to be a dividend, right? So if we're owning these shares, we get a nice dividend. The stock still needs to rally a buck to get up to that 25.50. I can always roll it. And if I'm still owning shares, I'm entitled to a nice dividend. But for right now, I'm holding out for the 26.
Same here. Same here. All right, the Googles. This morning opened higher, still pushing lower here, and we talked about this. I mean, I'm assigned at 108. My break even is at 103.82. I'm interested in flying a rescue mission here once I want to say probably 84 to 86 strike becomes available. So I'm definitely keeping an eye on this one. Right now, only the 88 strike is available, but I'm very interested here in flying a little bit more of an aggressive rescue mission. And we also see that we are in a new range here between, I want to say, 85, 86, and 102 here with a quick breakout to 108 that helped you to get out of the position. I'm still in it.
Yeah, and I like those levels. I might try to reestablish a new position, but closer to support.
Yeah. UNP, that's one that I entered last week, and then you joined, what was it, yesterday or 2 days before?
I think 2 days ago.
Yeah. So UMP, I sold the 197.50, you sold the 195, and I got assigned this morning. No, actually yesterday. So this morning the shares were in my account, which is something that is unusual. It doesn't happen that often, the early assignment, because they are expiring. My puts are expiring tomorrow. But since we are trading deep in the money here, and there's pretty much no time value left, that's where I got assigned. It can happen, Mark, but it's not that often that it happens.
Especially with our style of trading, right? If you go so far out in time and you're selling puts and you see something go deep in the money, then that's more likely to happen. With our style of trading, I think we've had early assignment maybe 3 times in the last 2 years. It's not frequent at all. And like you said, it's because there's no time value left, right?
Yeah.
But now you own shares and you could start looking to sell calls potentially. But this is also another one that has a nice dividend on Monday. So
Yeah,
you're
so
going to be
I'm
entitled to it.
okay that I own the shares right now because this means that I'm getting a dividend payment on Monday. And I
Buck
mean,
30.
the last dividend payment was what, $1.30. So let's see what they do this time. But that's
It's the
nice
same.
because it's the same, right? So
Yeah.
this brings down my break even by another $1.30. So I'm liking this one. All right, and then with our mastermind members, we looked for new opportunities this morning, and we did see Domino's Pizza. So that's interesting. This morning, the 297.50 was available because Domino's Pizza had an earnings miss, a huge drop here. I mean, they are down 11% right now, and I decided to take advantage of it, selling the 297.50 expiring tomorrow. So I got 80 cents, and based on my account size, that's a quick $400 for a 1 day trade.
Not too shabby. Not too shabby. I was actually right there behind you, but I put in an order for 90 cents. You came in at 80. You got filled, and that premium quickly disappeared. Now it's starting to get back to the levels that we were trading at when you put the trade on. But this is a perfect example of something known as volatility crush, right?
Yeah.
Yeah, volatility rush and volatility crush, and this affects the pricing of options. And so here, after that big reaction was such a significant move, volatility was picking up because there was uncertainty. How far are we going to go? Are we going to get down to 295 or 280? And that's where, with traders trying to figure out what the heck these options are should be worth and how much movement is likely, you were able to get some really nice premium, and it quickly disappeared. So even though we're back at the same level, the options aren't worth as much because of that volatility crush. Right now, I'm looking at the bid at 50, ask at 55. We'll see if we get back to the 80 today or higher. But it was a nice trade, and we had some of our mastermind traders actually close it for 80% max profit in just minutes.
Yeah, literally. Because I mean, if you look at a 5 minute chart, we saw that we had this reaction down, but then we quickly moved up, and there was possibility to grab 80% of the max profit. I decided to keep it open to go for the remaining $100 if it stays above 297.50 by tomorrow, and if not, I'm okay getting assigned Domino's Pizza, because we also looked at our asset correlation, and with Google CTRA, UNP, and DPZ, I mean, they are not very correlated at all. I mean, this is as picture perfect as it gets, wouldn't you say?
Yeah, that's as far as asset correlations go. That's beautiful.
Yeah. And then also, I mean, just looking at the underlying fundamentals of Domino's Pizza, I mean, here we already see a dividend yield, so they're paying a dividend. PE ratio, it's a little bit on the high side with 28, but market cap of 12 million. And if you just look at the last few quarters, their earnings, their revenue, and their profit super solid over the past few years. Yeah, I mean, even during the pandemic, everybody was having Domino's pizza, it seems. And we know it's not the best pizza in the world. It's probably one of the fastest pizzas because it's 30 minutes or less, or it's free, right? Do they still do
Hey,
that?
as long as the stock and the options make you money, I don't care about the pizza.
Exactly. Yeah, I'm not the biggest fan of Domino. And I mean, this is where they had competition forever. We talked about it this morning with our mastermind members. So I'm not concerned about this. I'm liking this. Now, let's take a look at overall at the markets, because an interesting turn here in the markets. And by the way, if you're liking this as we are going through these stocks, just click on like really quick. It'll help out the algorithm and also us, because then we know what you like and we do more of what you like. So click on like, maybe even subscribe to the channel. So anyhow, markets pulling back. We're looking at a 5 minute chart of the Nasdaq, and after opening up more than 1%, we are right now pretty much at where we were yesterday. Yesterday's close at the unchanged level.
Interesting to see.
Yeah. So this is where I think that there's a little bit hesitation going into tomorrow with the PCE price index that's being released tomorrow morning, and we know that this is one of the Fed's favorite inflation gauges. And after we saw an uptick there last month, I think it's very important to see another uptick is forecasted. So we'll see what this does. And also, I think new home sales is something, it's orange flag. It could move the markets because housing cost is still pretty high and contributing to inflation.
And that's another one to watch. Core PCE being the bigger of the reports, but you're absolutely right. Housing is definitely on the radar for investors and part of the inflation picture.
Yeah. Anyhow, so definitely interesting day tomorrow. After right now, this day seems to be interesting. I'm wondering if we pull back higher or if we close for a fifth day in a row negative for the S&P. I kind of feel that today will break this losing streak. I think that we will close higher, but barely. I mean, barely noticeable. What do you think?
I'm with you there, Marcus. I think that we can snap the losing streak, but not with a significant bounce to the upside now.
Yeah. So we'll see. Make sure that you're tuning in again tomorrow morning. And if you would like to learn more about how we trade these markets, I'll link to a video here about the wheel strategy. That's what we are doing. It's a quick 15-minute video. Take a look at it, check it out, and then make sure to tune in tomorrow because there will be some action.
Happy trading, everybody.